100K to a 1 million Bitcoin range from that I predict in the next halving cycle. So the 100K is more based on the time model. It's just the lower end of that range. The 1 million, or actually this one is at 500,000, is more the higher bound of that model range.
This Bitcoin expert is predicting that one Bitcoin will get to between $100,000 and $1 million at some point in the next bull cycle. And he's got the models to back him up too. Plan B, the anonymous on-chain analyst who is behind the famous stock-to-flow model, over the weekend finally released his official Bitcoin prediction, and here's how he came to it. Plan B laid out 4 separate Bitcoin valuation models, all of which had over a 90% accuracy in prediction. Those 4 models were based on variables such as time, supply, mining difficulty, or distribution. He then extrapolated all 4 of those models out into the future and took the upper and lower bounds to come up with his prediction. That prediction was between $100,000 and $1 million per Bitcoin. Now, although these numbers are wildly different, I don't think any of us would be complaining about a 6-figure Bitcoin. Make sure to stick around to the end of the video where Plan B breaks down each of the 4 models and how he arrives at his valuation. Also guys, if you want to stay most up to date on the crypto world, I send out a daily 5-minute crypto newsletter that covers expert predictions, on-chain data breakdowns, and breaking news, all for free. Click the first link in the description, enter your email, and join over 3,000 others to become a better crypto investor right now. Now, here's Plan B and his Bitcoin prediction.
First model, time model. That's the light blue line here, the very smooth light blue line. It's at the moment around 70K, and time, of course, is an approximation for adoption. That goes over time, more adoption of Bitcoin. And the logic then is that the price increases as adoption increases over time. It's a very basic model, it's a trivial model, and it's also the oldest model that I know of. A very famous one was 2014, a guy named Trololo had a very nice chart, and you might know his models, but there was even an earlier variant in 2012. The most recent variant, I think, is the rainbow model that shows that same logarithmic upward sloping curve, but that's basically a time model as well. I implemented here a power law model, which is basically the same thing. Now the second model is the stock-to-flow model, and the stock-to-flow model is quite similar. It's a dark blue line, quite similar to the time model. However, it has some jumps, and the jumps are, of course, the halvings. It's at 60,000-ish right now, which is quite similar on the log scale, of course, as the time series model, the time model. And stock-to-flow measures scarcity by the stock-to-flow ratio, and the logic then is that the Bitcoin price increases as the scarcity of Bitcoin increases. And there's special interest, of course, for the halvings. Those are the jumps, where the price jumps and the model jumps as well. You see the 2012 halving here, and the price jumps right after that, model 2. 2016 halving, price jumps right after that, and the model 2. Same here in 2020. And the next halving, of course, will be in 2024, so we see the model already going up. Now, I created a model, the stock-to-flow model, in 2019. That was here. And it was very intuitive for institutional investors like myself, but also like Fidelity and Grayscale, Van Eck, who used this model in their investment presentations. And I must say, personally, I am invested in Bitcoin because of the scarcity, mainly the 21 million supply cap. That was the argument that did it for me. Now, some people have a very emotional reaction to the stock-to-flow model for some reason. They say it's invalid and it's broken. And that's because the price right now is under the is very much below the model. But somehow for those people, the time model is not broken. The stock to flow model is. And somehow in 2017 and 2013, when the price was very much above the model wasn't broken either. And the same also for the time model. So I guess the emotional reactions are more personal, maybe against myself instead of the model so much. But anyway, it's a frequently used model, and it's the dark blue line. The third model is based on difficulty, and difficulty in red is currently predicting 30,000, so it's spot on actually. It measures the network power, the power of the Bitcoin network, and it's very comparable to hash rate and the watts, eventually the number of watts, the amount of watts the network is using. And the logic then is the higher the power, the higher the difficulty, the hash rate, the watts, the higher the Bitcoin price. And that's what you see over time. You also see very nice trends, like here, this very steep increase in the red line is because miners went from CPUs to GPUs to graphic cards. And another steep increase here is when the miners jump to ASICs. So mining specific chips, and from there on it's kind of, well, more flat. But it has a very interesting arbitrage relation, sort of make or buy decision. You can make Bitcoin as a miner with watts, with kilowatt hours, and then you pay a certain price. But you can also buy that same Bitcoin as an investor. With dollars, and so there should be a relation, arbitrage relation between the two, because if the price is very much above the model value, the difficulty model value, then of course you're going to mine, and the difficulty goes up. And if the price is very much below the model, then of course you buy it as an investor, and then the price goes up. So very interesting, very economically valid, and well, it's the third model in this chart. The fourth model is UTXO. UTXO, it's a green line. It's at 24,000 at the moment, so it's the lowest valuation. UTXOs are the 112 million Bitcoin fractions that total the 19.4 million Bitcoins that are out there right now. That's the total supply. But of course, as you know, the total supply is not whole Bitcoins. You can have fractions of Bitcoins, and every time you transact a fraction of a Bitcoin into more fractions, the Bitcoins get distributed a little bit wider over more UTXOs. So it's the logic then is that the more the Bitcoin gets distributed over UTXOs, the more the price will increase. And you see it tracks very well. It even got the dip here in 2018 after the 2017 all-time high very well. But then, to be honest, I thought the UTXO models were sort of done, like the address-based models and the transaction-based models, because there's level 2 on Bitcoin right now with Lightning and Liquid. And actually I thought until recently that those models were done, but then last couple of months we saw a sharp increase in the UTXO size to this 112 million. And thus a sharp increase in the valuation of Bitcoin based on the UTXO set. So it's very interesting where that increase will stop or if it goes on. And well, those are the four models that we're looking at. To be honest, all the models did quite well in valuing Bitcoin and predicting the Bitcoin price. In my opinion, none of those models failed. And the big question is, however, how should we use them? And, well, for me, how I use them is, you can see at every point in time, let's take this point, 2017, You can see if Bitcoin is overvalued compared to the 4 valuations models, or if it's undervalued, like in 2018. So Bitcoin moves from the upper bound of the model, of all the models, to the lower bounds, to the upper bounds, to the lower bounds, and that this is sort of this movement. And if Bitcoin is in the lower bound of the models, then it's a great time to buy Bitcoin. And actually, we are currently in the lower bounds of all the models, and as, of course, if Bitcoin is above all the models, and that was very clear in 2013, 2017, then you should be wary. Like, where is this based on? Obviously not a factor in one of these models, not on time or stock to flow or UTXO or difficulty. Probably based on psychology, FOMO. So that's dangerous, and so that's one way you could look at it. You could also take the average of all the models. You could look at the ensemble, the average, which is now 47,000 if we do that for all the models. And what's also very interesting to look at is what should UTXO and difficulty be? Can those two models approach the time and the stock to flow models? And the answer is yes. So in order to do this, the number of UTXOs should rise 70% to 190 million. And then the pricing, the value based on the UTXO set is also in the 60-70K range. And the same for difficulty. If difficulty goes 4x, so that's quite a jump, but it can be done, right? It can be done, for example, based on the insight right now that Bitcoin is very good in balancing electricity grids. The load on those grids can be very peaked and cause problems, and Bitcoin can then switch off the miners and unload those high loads. And also, we see that Bitcoin mining now helps flared gases, oil rigs, to burn those gases and use it for Bitcoin mining instead of flaring them or emitting them into the air. And same with landfills. So the environment argument or the power grid argument could cause a sharp increase in difficulty, in hash rate, and of course a sharp increase in price would also make mining much more profitable, and more miners would enter the market. So 4x difficulty, 70% plus in UTXO set would sort of bring all those models together to the 60-70K domain. And the other important thing is in how to use those models. You can see that only the time model and the stock to flow model can be extrapolated into the future, because we know this was the first year, second year, this was the 13th year. We can just put 14 in this formula, or 15 or 16 or 17, and then the valuation based on time is known. Same for stock to flow. We know the halving is in 2024. We know what the stock to flow ratio will do. It will double from today's stock to flow ratio, and we can plug that into the model and derive a value. So only those two models can be extrapolated, and you can see that this is exactly where I got my 100K to a 1 million Bitcoin range from, that I predict in the next halving cycle. So the 100K is more based on the time model, which is the lower end of that range. The 1 million, or actually this one is at 500,000, is more the higher bound of that model range. So how good are those models really? We could look at the goodness of fit, R squared, which is 97% for the time model, stock to flow model, and the UTXO model, and it's 94% for the difficulty model. But then R squared doesn't say anything, and I guess the very important thing to remember is correlation between those 4 factors and the Bitcoin price is not causation. The relation can be spurious, it can be incorrect. So you should always remember that. And also, I mean, those are very simple models based on 1 factor, so you can't expect those models to be 100% correct. 94 and 97% is actually quite good, and 100% would be impossible with these very simple models based on 1 variable. Some people even say that models are invalid and useless because variable X, Y, or Z is not in there. Like, okay, a demand is not in there, so the model is not useful. Or the dollar M2 money supply is not in there, so the models are not useful. That is not true. That's not true at all. I mean, yes, a lot of factors influence the price, not only those 4 factors. You have all the macro factors like the Fed and the inflation and interest rates and the money supply of the dollar. You have the SEC with their ETF approvals. You have exchanges that go bust, like FTX recently. All those factors have an impact on price. But most of those factors are random events. The Russia war, who could have predicted it? The mining ban of Russia or of China in 2021, who could have predicted that? Those can't be modeled. What we are looking for in models is the bigger structural factors that play a role in the valuation. And modeling is therefore very much about generalization of order and not memorization of randomness, because randomness is randomness that cannot be predicted. We want the order of things.
So there's Plan B and his official prediction for the next bull cycle. Plan B's 4 models predict that Bitcoin could reach anywhere between $100,000 and $1 million in the next bull cycle, an exciting prospect indeed. While these models are backed up by rigorous analysis, it's always crucial to remember that the crypto market can be unpredictable and always involves a level of risk. Keep in mind Plan B's stock-to-flow model did break down at the end of the last bull run despite being wildly accurate up until 2021. Never just rely on models alone to make investment decisions. Always form an opinion based off a wide array of sources, information, and data. However, understanding key metrics and models are undeniably useful, and how they influence Bitcoin's value can be key in making informed investment decisions. Before we sign off, just a reminder to hit that first link in the description to sign up for our daily 5-minute crypto newsletter. Get expert insights, latest on-chain data, and breaking news, all aimed at helping you become a savvy crypto investor. Anyway guys, hope you all enjoyed today's video and that provided you with some value. I'll see you all in the next one, and as always, all the best.